I started with equities when I was like 10 years old. And at that time it was, of course, Swedish companies. But I recall I have some pictures of me on the beach when I'm 10 years old reading annual reports. We started Tundra actually based on my view that I wanted to start the Pakistan Fund. The world's first, easily accessible Pakistan Fund. So that was the kind of the driving motive behind starting Tundra back in 2010. Our idea behind this market is that this is a high growth area for the next 5 decades, and not so many foreign investors know a lot about them. So if you become a specialist in these markets and find the absolutely best companies, the best entrepreneurs, that's a pretty interesting niche to have, and I think a good platform to grow from. Tundra today, we have our global frontier strategy, which is around $200 million. But then we actually, last year, we also got a new mandate, which is a $750 million mandate. Not everyone wants to invest in early growth markets like Pakistan and Vietnam. And not everyone wants to invest in China, for example. So we have 2 options for investors, and it's up to them to decide what they believe in the most. How we define sustainability is that we want to find companies who have a positive impact on society. We have companies who are involved in solar energy and all that, areas which you normally connect to sustainability. Interloop does so well is because they're involved in ready-made garment sector. And the buyers of their products are constantly pressured by the consumers. The first thing I would emphasize is that if you invest in these markets, pay less attention to the price and pay more attention to the quality of the business. All of the markets where we invest, they have growth potential, but the characteristics might be different. So a market like Pakistan, where we know that this is a market that goes through regular boom and bust. We have focused more on export companies. It's a big problem if you're a new investor and you want to open up an account in Pakistan. For many companies, with increasing scrutiny that you have these days in terms of compliance and administration rules, etc., it's almost impossible. We used to have Sri Lanka as a big position. When COVID hit, we were a bit concerned, so we reduced the position significantly. But then I would say that we did not realize that the political path that the country would take in terms of their economic policies. We misjudged that.
Good afternoon, Mattias. How are you?
Fine, thank you. Good to see you, Kisar.
How has your long trip been going so far?
I think it's been great. It's been busy months. So I've been in Asia now since mid-January, and traveling around the region, meeting a lot of contacts in the region. So I think it's a good way instead of being in winter Sweden.
Sure. And currently, I believe you are in Singapore.
Yes. So I'm traveling across Asia, but my son goes to school here in Singapore. So we have this as a base, but then I travel every couple of weeks or a month or something like that. So.
And any plan to visit Pakistan in near future?
I think I don't know. My plan was to try to get that in before we return to Sweden in early June. But there's been a few things that have constantly come up, which has meant that I had to delay it. But hopefully I will be able to visit Pakistan as well before we go home to Sweden in June.
Let me know also if you pass by Dubai.
Yeah, we'll definitely do that.
Thank you very much your time again, Mattias. We spoke last year That was a very difficult time in Pakistan. I remember you were very positive. You also shared your Sri Lankan experience with us, with our investors. And I thought to have a conversation with you again on kind of similar topics. So thank you very much for your time. Let's start with the basic question. Who's Matthias? What does he do apart from his day job, let's say?
Well, I think first of all, I was kind of an early adopter of equities. I started with equities when I was like 10 years old. And at that time, it was, of course, Swedish companies. But I recall I have some pictures of me on the beach when I'm 10 years old reading annual reports. So that was kind of the business interest was always there. Then I studied, and by coincidence, I ended up at a firm, a broker in Stockholm. I was supposed to do Swedish equities, but they also had a Russia desk at that firm, a pioneering part of the firm. And after a few weeks on the Swedish side, I was asked to join the Russian desk instead. So that's kind of how I got into emerging markets. And I think Russia at that time, you had was no central clearing. You had to settle shares through physical delivery. So basically sending people by plane or by car or by bicycle to the company's headquarters in order to register your shares. And of course, no liquidity going up and down. That was also a big hassle. And then I started there in 1996 when I was 23 years old. And that was just kind of before the Russian boom. Yeltsin was re-elected, and every foreigner in the world was about to go there. But then you had the Asia crisis and the Russian crisis in 97, 98. So the equity market fell 97.5% from top to bottom. And I think being at that time 24 years old, having only seen a bull market, I think that was a very good experience to get early in your career. But we kind of continued with other emerging markets. But once you kind of started with a major emerging markets, which not so many people knew anything about, I was always kind of lured into kind of the lesser known markets. So I started looking at markets like Sri Lanka. I came across Pakistan, but a couple of times I actually just scrolled by Pakistan because my perception at the time, back in, and this was early 2000s, it was that this was just the gravel roads, camel on the streets. That was all I have ever heard about Pakistan. But then I looked a little bit closer and I found that at the time, the equity market was actually turning over as much as Singapore. And surprisingly enough, you had a lot of actually good brokerages with good English written reports. And I found companies that had been listed for decades who actually had the same access to information that I was used to from Sweden. So kind of my perception was kind of turned around completely. And instead I was very curious about this major market who no one knew anything about, but everyone had a very strong negative opinion. So that's how I came into Pakistan and my Pakistani interest.
And Matthias, if a little bit you can explain what were the inspirations behind founding Tundra?
Well, I think at the time, I worked at this Swedish firm for 10 years, and those were kind of the days when you can actually make money as being on the sell side. So I got two kids. I got a bit tired about the kind of the sell side work that I was doing, and I had this idea that I wanted to try something on my own. And being one of the first investors in Russia at the time, the firm that I worked with, they started one of the first Russia funds back in '96. So So I had a couple of years of experience of Pakistan, and I thought it was kind of a hidden gem that I didn't understand why not everyone was looking at least a little bit on this market. So we started Tundra actually based on my view that I wanted to start the Pakistan fund, the world's first, easily accessible Pakistan fund. So that was the kind of the driving motive behind starting Tundra back in 2010.
And I believe Tundra is quite known for frontier markets, and I would call Tundra as a specialist for these markets. So, um, what is all about this love for frontier markets?
Well, I think it's first of all, so Tundra, our definition of frontier markets, it's low income markets and lower middle income countries. And that is basically all countries in the world with a GDP per capita of below $4,500, give or take. That's around 50% of the world's population, and it's going to be two-thirds in 50 years. But they also trouble markets with a lot of problems today, corruption problems, less developed legal infrastructure, less developed equity markets. So kind of our idea behind this market is that this is a high growth area for the next 5 decades, and not so many foreign investors know a lot about them. So if you become a specialist in these markets and find the absolutely best companies, the best entrepreneurs, that's a pretty interesting niche to have, and I think a good platform to grow from. So that is the basis of Tundra, and that is why we kind of started it. And Pakistan was our first market, but our experience was also that most investors they preferred to mix or different countries like Pakistan. So we started our global frontier strategy, which also included Vietnam, Sri Lanka, Egypt, Bangladesh, Philippines, and Indonesia. But we want it to be kind of a very clear theme that investors should know that if they invest in our fund, they're going to get access to these risky markets, many times in trouble, but with a superior long-term growth profile. And that's it. We're not going to invest in the Middle East or Eastern Europe, those kind of markets, but clear focus on early growth markets.
So this means you don't follow the typical category of emerging markets or frontier markets like we have Morgan Stanley. They do shift their portfolio. So basically, you focus on the countries, GDPs, and per capita income.
Yes, and we try to. I think every fund or every mandate you have, it needs to be, in my view, it needs to be very clearly defined that you as an investor, you don't want to invest in a black box, that you don't want the fund manager to just invest in anything. You want to decide yourself, do I believe in what do I believe in? Do I believe in China? Well, then you can buy a China fund. Do I believe in these early growth markets? Well, then you have our fund. But I think it's up to all investors to decide, but it's a responsibility of the fund manager to have kind of a clear theme so that the investor knows what are they exposed to in good times and in bad times. So Tundra today, we have our global frontier strategy, which is around $200 million. But then we actually, last year, we also got a new mandate, which is a $750 million mandate, but that is for emerging markets. But it's important to separate these because it's two completely different investments. Not everyone wants to invest in early growth markets like Pakistan and Vietnam, and not everyone wants to invest in China, for example. So we have two options for investors, and it's up to them to decide what they believe in the most.
Matthias, you also have a sustainability fund, and I first time read about Pakistani company Interloop via your reports. So, how is your experience about ESG initiatives in Asian markets? Are there any companies who really impressed you with their initiatives?
I think first of all, it's important to define sustainability because I think that for us, the most crucial task in low income and lower middle income countries is eradicating poverty. Because with poverty comes corruption, with poverty comes lack of education, lack of healthcare, and hardship for the population. So how we define sustainability is that we want to find companies who have a positive impact on society. So it doesn't necessarily have to be that we have companies who are involved in solar energy and all that, areas which you normally connect to sustainability. But I would say more important for our sustainability perspective are the owners, that we trust the owners and the managements, that they have products and services which we believe will be needed in the future as well. For example, we don't invest in tobacco companies, we don't invest in snacks companies, companies with products with a very high sugar content, because we believe that those kind of products that are not really good for people's health will be in less demand in the future once people realize this. So we try to find companies with strong managements and owners that we can trust, who produce services and products that we believe will grow faster than the economy in the future, and that are good employers, that pay their taxes, and when you have those kind of companies that have a positive societal impact, that means that we're addressing the second largest risk in frontier markets, which is state governance risk, the risk that the state will attack you. The state might attack you through introducing import tariffs or higher taxes for a certain sector. But if you're a company that helps drive growth forward for the society, that also means that you make the politicians look good. You help them achieve higher growth. If they can achieve higher growth, higher employment, that means they're more likely to be re-elected. So for us, summarizing all this, sustainability for us, it's from a commercial perspective. It makes sense. It's profitable. And those are the companies that we invest in. We don't invest in a company just because they're doing something admirable. They need to be good businessmen or they won't grow. They need to be able to create employment. They need to have high return on capital in order to be able to return capital to investors as well. So it all makes sense. It's completely integrated, but it's a pure commercial perspective.
Any companies come to your mind now who are doing good work?
I think you mentioned Interloop, and I think Interloop is, of course, they're Pakistan star in the sustainability area. In our portfolio, they have the third highest overall score, and that's including companies from Philippines, Indonesia, Vietnam, and all other countries. And I think what Interloop does so well is because they're involved in ready-made garment sector, and the buyers of their products are constantly pressured by the consumers to introduce more sustainable ways to manufacture their products. And Interloop understood this early, which means that they're providing full transparency to the buyers of these products, who then can use this as an argument. So they have grown more than twice as fast as any of the larger competitors in Pakistan over the last couple of years. And they're doing this because they understood that sustainability can be an edge, sustainability can be profitable. So I think it's in my view, we haven't come across any Asian ready-made garment company that have as high standards as Interloop. And they're being rewarded for it in profitability.
Mattias, you cover a lot of countries. How do you identify the best investment opportunities? And if you mind sharing some success stories. I remember last time when we discussed, there was a system limited from Pakistan. It had shown tremendous performance. And what's your latest view?
I think first of all that for our fund, we say that we normally do 8 to 10 markets at a time. That's 3,000 to 4,000 companies overall. We've been doing these markets now for a little bit over 11 years. Since we started the fund, we have made investments in about 150 companies. So you can say that 3 to 4.5% of the total universe is kind of our selection of companies that meet the standards that we require from them. So then you have every year, maybe there's 1 or 2 new companies that come into radar being listed, etc. But it's we've been working with these markets, a limited number of markets for a long time, and I think that we have a decent selection within this universe. I think in terms of success stories, there are a number. The last couple of years have been very, very tough for almost all of our markets. But I think a company that obviously stands out is a company in Vietnam called FPT. And you can say for the Pakistani listeners, you can say that this is Vietnam's Systems Limited. So it's basically software services, consultancy services, as opposed to systems. FPT is a little bit more focused on Asia, mainly Japan. But they're also, just like systems, they're gradually kind of nagging the market share of the Indian consultants. And it's been growing on 20% a year for the last couple of years. And since our investments, I think we're up around 600% over the last 8 years.
And if any, like a checklist for my retail fellow investors you want to share, what would you follow to pick a good investment opportunity? Any checklist, 1, 2, 3 things you should be very conscious about?
I think something that I strongly believe in, and that I think is even more relevant in these early growth markets, is that one should recall that even the most successful companies in markets like Pakistan, Vietnam, Bangladesh, etc., they're still around 30 years behind the more developed markets, sometimes 50 years behind. So the first thing I would emphasize is that if you invest in these markets, pay less attention to the price and pay more attention to the quality of the business. Because reality is that the good companies, the high quality companies that have historically outperformed and that have surprised the investors positively, they're very likely to continue to surprise positively. Whereas the companies that have made you disappointed in the past, that had corporate governance issues or had margin issues over the last 10 years, they're also more likely to negatively surprise you. So don't be afraid to run with the winners, but rather I would say that if you're going to put together a portfolio in a market like Pakistan, for example, first check price performance on 3 years, 5 years, and 10 years. And you will find that in all sectors, you will have a couple of companies that always kind of outperform the others. And that's the first good indication. And don't be afraid that some companies might have moved 300%, 400%, etc., because you're still so early in the growth journey of these markets. And the most important part is to have quality of the business, because the growth will be there for decades ahead. So focus more on quality and less on bargains.
Matthias, last time when we spoke, we also discussed the currency situation. So I'm also an overseas investor. So my portfolio would be down in USD term by maybe around 25 to 30% still, because I started investing a long time back, not very long, at least 3 years back. So how do you, as a foreign investor, manage with this currency fluctuation?
I think For as we see it, when we look at the market, we kind of identify the characteristics of that market. If you take a market like Pakistan, for example, it's very easy to conclude that over the last 20 years, the currency has depreciated by an average of 7% versus the US dollar every year. And those that have followed the markets for a decade or more, like we do, you also know that you have regular boom and bust cycles because you have an insufficient export base. You have a kind of still a closed economy. So what we always do is that we try to, based on each market, because all of the markets where we invest, they have growth potential, but the characteristics might be different. So a market like Pakistan, where we know that this is a market that goes through regular boom and bust, we have focused more on export companies. So the biggest, two of the biggest positions are Systems Limited, which is an IT exporter, and Interloop, which we previously discussed. A second category that tends to do well in a market where you have big fluctuations, inflation going up and down, interest rate spikes, etc., is financials, where we also have the second biggest chunk of the portfolio. Then we have not only had good stories in Pakistan, we also believe in the healthcare sector, where we have two pharmaceutical companies. That has not been a good sector. We've lost quite significant amount of money in that sector over the last couple of years. But it's, I think, a long-term, very, very interesting growth story, because you have a dynamic relationship between a company's GDP per capita and how much they spent on healthcare, including pharmaceuticals. So I think that the healthcare sector also, even though it's they've been hurt by the currency depreciation, they've been hurt by regulated prices of pharmaceuticals historically, but it is a sector that needs to grow significantly if Pakistan ever will take the next step up to upper middle income country sometime in the future. So we can accept a certain part of the portfolio also in those sectors because of what we believe is superior long-term growth prospects.
Mattias, you closely follow developments in Pakistan. I follow you on Twitter, LinkedIn, so you also sometimes share your thoughts. What would be your top kind of suggestions, recommendations for Pakistani authorities to do, which will attract more foreign investment in Pakistan?
I think and I've said that a couple of times, that one thing that Pakistan should do is to abolish the capital gains tax that is in place. And not because of the money that it costs the investors, because given the performance that most foreign investors have had over the last decade, there's not so much taxes collected anyway, but because of the administrative hurdle, because it's a big problem if you're a new investor and you want to open up an account in Pakistan. For many companies, with increasing scrutiny that you have these days in terms of compliance and administration rules, etc., it's almost impossible. So that would be the first thing that I would do. And I would, if it's about money, because I'm not saying that Pakistan should collect less tax, but instead introduce some kind of point tax instead. So 5 basis points, 10 basis points on each trade. And I think Pakistan would make more money in taxes that way. So that would be my first. A second is to, and that's kind of a harder way, but I think the big problem and the reason why Pakistan has issues getting foreign direct investment is because of all the restrictions on when you want to transfer money out of the country or when you want to buy machinery for your facilities. I think if Pakistan would kind of have a completely open economy for foreign direct investment, so that a company that wants to set up something in Pakistan can import whatever machinery they need. They can repatriate their money when they need. Then I think that the companies themselves, they will find a way to make this profitable. What no foreigner can accept is when your hands are tied, that your money is tied, or you can't get the equipment that you need, or you can't get money out when you need either. That is the only thing that foreigners can't accept. Higher risk is completely fine, but you need to be able to manage the risks and manage your business. So I say those two, one for equity market and one for foreign direct investments in general.
How was your experience in Sri Lanka after the default, during the default? I believe Tundra was the first mover in that market.
Yeah, we did. We actually, we used to have Sri Lanka as a big position. When COVID hit, we were a bit concerned. So we reduced the position significantly. But then I would say that we did not realize that the political path that the country would take in terms of their economic policies. We misjudged that, which meant that when they introduced capital controls in mid-2021, we still had around 6.5% of our portfolio in Sri Lanka. That made me very, very disappointed on the country. And I think the economic policies that they did at the time, they introduced capital controls, but they lowered taxes for companies, and they allowed, basically to squander away the whole foreign currency reserve. They refused to realize the problems they were in. So when we came to early 2022, they were almost completely empty of foreign currency reserves. They didn't even have money to buy pharmaceuticals or fuel for cars. So that was a very, very disappointing, and I think the worst management of by any country that I ever seen, and it's very much surprised us that they would be able to do something that terrible. But after that, when they let the currency go, restructured their foreign debt, we have, and they put a new leadership into place. We've gradually increased our position again. So. And the market has had a good comeback, at least the portfolio companies that we have there.
Mathias, you have seen the volatility in Sri Lanka. You have seen a lot of volatility, downturn in Pakistan. What would be your advice to retail investors? How they should behave during those downturns?
I think it's the first of all, if you look as a private investor, that I think a good rule of thumb is that you should not be more exposed in anything than that you can kind of easily sleep at night. So that's the first, because you can't gamble with money that you can't really afford to lose. But if you are an investor who are able to take a long-term horizon, say 5 years, 10 years, 20 years, I would say that now is probably an amazing time to invest in Pakistan. For those that have not started, especially the young part of the population that are kind of thinking about their future pensions, etc. I think it's an amazing time with what the companies are delivering, what kind of dividend yields the market is producing, and with the crisis that you already have behind us now. So we're going to go through very difficult times again, but it's going to go in cycles. And I think the cycle that starts now, regardless, I'm not giving any judgment to the political situation that has unfolded over the last couple of years, but purely from a market perspective, I see that Pakistan now is entering a period that is actually very similar to what we saw early 2012.
I had a discussion with Mubashir Zuberi last week, so we discussed this boom and bust. So we believe that we are getting out of that bust, and this is a good time to start investing to enjoy the boom in coming years, I believe, apart from political situation.
I think so too, and I think, if to be completely frank, that the situation right now, where everyone understands that it's a military that is in charge, you can discuss that from a democratic perspective, but for investors, that means stability, and that's as you can see, the best period Pakistan ever had for the equity market was, of course, during Musharraf's rule. So there's two, you need to keep them aside. I'm not saying that this is a good scenario for the population, but I do say that stability is kind of the first ingredient for any investor to enter a market. And I think that's in a best case scenario, that's what the market will see.
Matthias, how do you compare today Pakistani equities with the other emerging markets and wealth markets equities?
Well, Pakistan is our second biggest exposure in our frontier fund. It's only Vietnam that is larger. We have a 20% position in Pakistan. So I think that's, from my perspective, it is. I believe that it's early in a phase that right now will probably take a couple of years. So I think kind of we've seen the first run upwards, which was when you and I discussed the last time, that was approximately at the bottom. Then it hovered around the bottom for some time, but we're up 70% in US dollars since then. But some might say that, that's a big run up. But if you kind of draw the graph out from a longer term perspective, it is, in my view, I think we're in the early phase of a number of years that will give decent returns. The normal valuation of the market, I would say that you can't compare Pakistan to Vietnam or Pakistan to India. You need to compare each market with their own historical valuations, because each market have different risk characteristics. But if you compare Pakistan's to itself, to its historical valuations, which in normal times were around maybe 7 to 10 times earnings, and we're now at around 4.5 maybe. And the corporate profit growth continues to be one of the highest in our frontier universe. So it's not only, it's 4.5 times today, but companies are growing by maybe 7 to 10% a year. Profits are growing. So I hope, and I would not be surprised that if the market has doubled within the next 3 years in US dollars.
Excellent. Matthias, when we look at the global economic landscape, there have been a lot of developments which have affected the markets. What is your current view about macroeconomics in overall in Pakistan and US? How do you see things going forward?
Well, I think it's a very divided world right now. You have, for example, one of the biggest growth engines historically, China, is in a lot of problems due to primarily their housing market, which has put a dent on private consumption, appetite for equities, and all of that. So they're basically down at zero inflation, and they've been there for some time. Then you have a market like the US, which is another big growth driver, which is kind of continues to do very well, where inflation doesn't really look to come down as much as people expected. So I think that half a year ago, people were starting getting optimistic about rate cuts in the developed markets. And we said that we believe that we're going to see that. We're going to see lower interest rates globally. But it might negatively surprise investors by how much they will go down. But I think you will have that supportive factor for global growth. You can see that China, they're doing everything they can right now, both on kind of the housing markets, but also on the equity markets, to try to kind of stave off the worst pessimism. So I would say that we probably will have a supportive global climate for equities, unless we have some major geopolitical events. Then, of course, we have the election this autumn in the US, where I think for emerging markets, probably Donald Trump is not the best option, given his promises to continue to isolate the US from the rest of the world. But on the other hand, kind of we have that already in kind of people's expectations and people's fears. So I would expect overall a decent year with some rate cuts, but maybe not as deep cuts as we expected like 6 months ago, but a slightly supportive climate.
We spoke about Tundra's view about different markets to enter, but what is your personal view about other foreign investors? What do they see before entering into any market?
I think it's if we look back now, so we have basically since end of 2017, we have constant crisis in emerging markets, one after each other. The small emerging markets are always the most vulnerable, but they're also kind of you can say that they're at the tail of the whip. And that means that when we have generally tough times for emerging markets, it's even tougher for the smaller emerging markets. What we see now is that as we wrote actually in our latest monthly letter, which we had a headline on Dawn in Frontier Markets, and what we cannot conclude is that right now I don't have any specific risk concern on my table. And we've had a crisis in Sri Lanka, we've had a constant crisis in Nigeria, we had a big crisis in Egypt, we had Bangladesh with the floor pricing, and we had Pakistan with this kind of political and economical mess. Right now, the coast is clearer than what I've seen since 2012, which means that foreign investors' appetite, in my view, and we've said that many times in our letters, we think that foreigners are too afraid of what a crisis, how it will impact corporate profitability. They don't understand the connection really. So I think they overstated the impact, but they were still afraid until the crisis was over. Now the crisis are over in almost all of these markets. So I think that they will exaggerate when they come back. They will be too optimistic. So it makes sense that we have a couple of decent years ahead of us with probably no real currency crisis. We're going to be focusing on growth again in the companies, and you're not going to have the currencies depreciating and eating up your US dollar earnings. But you will also have the psychological impact when foreigners come back, are very optimistic and suddenly focus on these fast growing companies with much lower multiples than you have in the US and Europe. And that tends to mean that you get an exaggeration also on the upside. So I think that we don't calculate on multiple expansions, but I think it's reasonable that will be a part of it this time as well. So we will have profit growth, but you will also see that the markets become more expensive.
I just have less than 3 years of investing experience. So I have learned that to invest, we must have a 360-degree view. I believe you also keep a very good check, or you always have a good pulse of 360 view. You look at economy, politics, all. But I still see a lot of people focus on one side of the analysis. Some people, they go deep into the fundamental analysis. Some they like technical. Some they just look at the political development. Some they follow macroeconomics. So what do you do? How do you do your analysis? Do you have fundamental analyst, technical analyst in-house? So if you may share some of your working practice.
I would say, I think the best insult that I ever got was someone that told me, "But Mattias, you're too fundamental in your thinking." And that was basically that we held on to a market which everyone hated at the time. But I think that is, one should recall that when you invest in equities, you can speculate in stocks, speculate in price movement, but as we see it, you buy a piece of a company, and that is what you should focus on. So we're very long term when we invest. We say that our preferred horizon is forever. Preferably, we want companies that we can be shareholders of for decades ahead. That's the perfect investment for me, that I don't have to trade them, I don't have to exchange them. But I think the fundamental performance of a company is constituted by components. So you have in there, you have the political environment, you have the economic environment, and the most important part is to try to find quality companies who are adapted to the environment where they operate. And I think the easiest example, which we've used many times, is a company like Systems Limited. So first of all, they earn a lot of export revenue, but what they also do is that they educate people. So they increase the value of the human capital of Pakistan. It's better for Pakistan to have a software engineer than a textile worker, for example, because he creates more wealth and he's going to be able to pay more taxes, and the net present value of his taxes is going to be higher than for the textile worker. So that means that there is an incentive for the state, for a company like Systems to succeed, because they provide export revenue, they help increase the human capital of Pakistan. So those kind of companies, perfectly adapted to the local environment, is actually only good for them if the currency depreciates. Fact is that over the last 6 months, the stock has significantly underperformed the market because the currency strengthened again. So it is try to kind of you should be fundamental, but part of the fundamental is also what you mentioned with the political analysis and those. But it should be integrated, and you should never really talk about areas which does not impact the company's fundamentals. But that's on the premise that you're a long-term investor, that you understand that when you buy a stock, you buy a piece of a company. You're a shareholder, you're owner of that company, just like the major shareholders. And I think that's the way you should view investments. That's my view.
Mattias, basically I'm an HR professional, but I have been working for investors education for last 3 years since I started investing. So I see there is a bit of dilemma that when markets are down, when there is a good opportunity to invest, they are scared. They don't want to invest. I still remember I did 50 Twitter spaces weekly talking to experts and bringing them to answer questions from the investors, traders. Most of the people were very scared. And I was also called on Twitter by some of my fellow investors, the only positive analyst in the market. Still, I'm very positive, and I believe, as you mentioned, this is a start of another cycle in Pakistan. But the dilemma which I was mentioning is that when markets are down, people are scared. When markets go up, they are again scared that there is some kind of manipulation and fear of height and all. What is your advice for my fellow investors right now?
Well, I think the normal for most markets is that investors are very positive after a couple of years when the market has moved up, and they're very negative after a couple of years that the market has moved down. I think for Pakistan, the situation can be a little bit different because I think you have a higher share of the population that distrust the government, that distrust the country. What we try to do is you need to kind of separate. I think a country is not necessarily its leaders, especially in low income and lower middle income countries. It's the population, it's the people, and it's the companies and it's the entrepreneurs. So I think rather than, and at the end of the day, politicians' ability to impact the corporate development of a company is still limited. You will have a lot of successful companies, just like Systems have shown, just like Interloop has shown, just like Misan Bank have shown. So I think it's rather than asking yourself if you trust Pakistan, ask yourself which companies do you trust, because these companies are likely to do well. And then for any investor, I would normally say that the best way, and one way that many Swedes did, because we started investing in funds early, is that we introduced something called monthly savings. So invest a little bit every month. That means that the timing of your investments is not as important. If the market goes down, well, you will be able to buy more fund units or more shares. If it goes up, well, that's good for you because you already have some investments. But to do it, not use the equity market as a betting pool, but rather kind of invest long term. Understand that this is every time you buy something, you buy a small piece of a company that you believe in or a fund that you believe in. And over decades, it has always shown that equities is the best possible investments. And with Pakistan, although the market has not been impressive over the last 10-15 years, if you look at the corporate profit development in Pakistan, it's one of the best in emerging markets. And it's actually, I normally sometimes compare it to India, where the Sensex index have shown lower profit growth than the KSE 100 in US dollars over the last 10 years and the 10 years before that. So, and there's a limit to how cheap something can get when you have corporate profits growing over time. So we will have crisis again, probably in 5 years or something. It's going to be something we don't even talk about today. But if you invest gradually, long term, buy a little bit more when it's cheap, then it's going to be a great investment for the next decade or two.
I don't know if you have read some comments on Twitter. There is a fellow investor, always. He mentioned, I believe on a lighter note, that why Mattias is not giving up on Pakistan.
Yeah. Well, I think it's going back to the fact that we don't view the country's leaders as necessarily the best representative of the country as a whole. But I think Pakistan, first of all, we have a couple of people working for us that are in Pakistan. I have a lot of friends in Pakistan. I've traveled extensively in Pakistan, and I met so many amazing people. And I'm not saying that Pakistanis are better than any other country. It's just I'm saying that they're just as good as the people of Bangladesh or Vietnam or Sweden. 90% of the population are honest people that you would happily have a coffee with, and corporate leaders that you would happily trust your money with. Whereas you will always have the bad people, like you have in every country. The difference in Pakistan is that there's too much focus on the negatives. As one famous entrepreneur once said, that 95% of what is written about Pakistan is about the 5% negative. And Pakistan, I think, just as any other country, deserves a balanced view. Yes, talk about the bad things. Don't hide the political squabbling that has been going on with the military kind of coming in and sweeping away in a way that you can highly criticize. But also talk about the good things. And the most important part for all markets is that we gradually eradicate poverty. Because with that, a country becomes less corrupt, more children goes to school, good for gender equality, good for economic progress. So focus more going forward on ways to how can we grow more? How can we make the country more prosperous?
I strongly believe, Matthias, that Pakistani government should give you the highest award as a foreign investor. You have been doing great for Pakistan. My last question is, when you zoom in on KSE 100 index, what sectors, which companies you believe could be a good companies or good sector to focus on going forward, at least this year and the next?
I would probably say that a sector that we believe in strongly long term, that has not performed in the last couple of years, is the healthcare sector. But that's a very small sector. Another that I do believe, but it's not very many options in it, is also the IT sector. Those two are probably my best bets. I do believe that we will see a revaluation of the banking sector as well. But people should keep in mind that the current profitability in the banking sector is not sustainable. They're not going to have these high interest rate margins, these high return on equities. So probably if you're looking at banks, yes, you should have a revaluation, true, but you should probably divide the profit by half. If you still like the stock with the dividend yield, with half the yield and double the valuations, then that's also going to be a good sector.
Indeed, I agree. A lot of people are scared of the heights, but I believe pharma sector, tech sector, they have not still performed.
Yeah.
Thank you very much, Matthias. Truly appreciate your time and support always.
Yeah.
Thank you very much.
Thank you, Kisa. Take care. Bye-bye.